Welcome to KNN. KNN is brought to you by Bob Knakal, Chairman of New York Investment Sales at JLL.
Hi, I'm John Hageman, Managing Director at JLL. Welcome to KNN. Today I'm here with Bob Knakal, Chairman of New York Investment Sales, and today we're going to talk about the first quarter investment sales numbers in Manhattan. So Bob, we got the first quarter of 2022 behind us. Tell us what the market looked like.
Well, Hags, fortunately, activity in the market picked up. We had our second really robust quarter in a row, and fourth quarter of 2021 bailed out 2021. If it hadn't been for the big surge we had, 2021 actually would have ended up with lower volume than we had in 2020, the massive COVID year. So the market definitely has been trending in the right direction, and that's a great thing to see.
Bob, let's start with one of our favorite statistics, dollar volume. What did that look like in the first quarter?
First quarter 2022, investment sales volume in Manhattan, and again, we're looking at transactions over $10 million, of $8.6 billion, which is on pace for $34.4 billion for the year, which would be the best year we've had in six. That comes on the heels of $8.6 billion in the fourth quarter of 2021. Those two back-to-back quarters were the best two back-to-back quarters we've had since the second and third quarter of 2016, in which there was $12 billion and $11.1 billion respectively. So the $8.6 billion isn't quite at that level, but still very, very robust. So Hags, if we look at dollar volume in 2020, we see it was $11.2 billion. In 2021, that rose to $15.75 billion, and then now we're on pace for the $34.4 billion, which is a great increase. Not quite the $57.5 billion we had back in 2015 at the peak of the cycle, but these numbers are clearly moving in the right direction.
That's dollar volume. Let's talk about number of properties sold.
Okay, on the number of properties sold front, we see in the first quarter we had 55 transactions over 10 million in Manhattan. Again, for some historical reference, in 2020 there was 104 properties sold for over 10 million, and that was the lowest quarterly total we had going all the way back to 2009 when there were only 60. And again, we have to be careful because the basket of properties that sold back in 2009, if we inflation adjusted them, there may be more. So it's not quite an apples to apples comparison, but still 104 transactions over 10 million in 2020. That rose to 191 sales in 2021. And this year, if we annualize the 55 that occurred in the first quarter, we're looking at about 220 for the year. So that would be about a 15% increase over what we had last year.
So about for number of properties sold, we're projecting a 15% increase if you annualize the first quarter numbers. What about dollar volume percentage increase?
So going back to dollar volume, Hags, if we hit the $34.4 billion, that will more than double what we had in 2021. That's actually on pace for 118% increase.
Wow. So
the numbers are looking really good. And really what has fueled the big increase in dollar volume has been a surge in office building sales. For most of 2020, the office building sales market was dead. In the first quarter, we had about $5.8 billion in office building transactions. That was 68% of the total dollar volume we had in the first quarter. So the resurgence of office building sales has been something that's really helped that dollar volume metric.
So it sounds like we had a very positive first quarter followed by a really positive fourth quarter in 2021. What are some things you're focused on for the rest of the year that you think will affect the number of sales in the market in general?
Well, I think the things we have to keep an eye on, Hags, number one today, interest rates. Just last week the Fed raised interest rates by 50 basis points, and they're telegraphing that there are going to be subsequent increases this year. So clearly the market is changing on almost a daily basis. I don't know when our viewers are going to be watching this episode, but we're filming here on May 10th. And the 10-year is going to open at the 3.15 this morning, something like that. So very, very different interest rate environment than we've had. And interest rates are certainly one of the things that we're going to keep an eye on.
Bob, one of the things we always talk about, but from your perspective, are interest rate increases always bad for the market?
Well, that's an interesting question, Hags, and I think interest rate decreases are always positive for the market, 100% of the time. Increases are not always negative. It depends why rates are going up, not if rates are going up. And if you look at interest rates and cap rates, they're very, very highly correlated. Generally, the higher interest rates are, the higher cap rates have to be. And generally, with higher cap rates, you have lower values. However, if the increase in interest rates is created by tangible traction in the economy, you can have higher NOIs in your buildings. So even with a higher cap rate, you come up with a higher value. So today is still uncertainty about why rates are rising. A lot of it has to do with monetary policy, fiscal policy, what's coming out of Washington. We're spending trillions of dollars. How is that impacting inflation? What's happening with the war, what's happening with all kinds of things. So it's really yet to be determined, but interest rate increases are not always negative for the market, but certainly rate decreases are a great thing.
So besides interest rates, Bob, what else are we keeping an eye on in particular?
Well, we have to keep an eye on supply and demand. Clearly, there were a number of people who would have preferred to sell in 2020 or 2021 that didn't, because value just wasn't there at the level that they would find compelling. So we're keeping a close eye on how many BOVs we're doing for clients, how many people are thinking about selling. We see with interest rates rising, there are a lot of folks who have mortgages that are coming up that may, perhaps they have a $100 million mortgage on a property and their bank will now refinance them and give them 80 million or 85 million. Do they have that equity to put into the transaction to refinance it? Or do they, even if they have the money, do they want to put that extra money in? So will that precipitate sales happening? So the number of things to keep an eye on. Supply and demand certainly are a couple of factors we're going to keep an eye on in addition to interest rates. And then again, tax policy, general legislation about what's happening with 421A and all the different things that impact the behavior of market participants are things we'll be keeping an eye on. But I have to say, generally, very, very pleased with 4Q21, 1Q22. We're in a good spot, and we just hope the ball keeps rolling.